Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for June 1st through the 5th, 2020. We're going to go ahead and cover the weekly change for last week, which is up on the screen now. Then we're going to go ahead and jump into the four main indexes, going over, the change in the positions, whether they were positive or negative for the week. Then we're going to go ahead and take a look at stock futures, which really don't mean too much, seeing that it is Saturday here and we still have Sunday and early pre-market on Monday. Then we're going to go ahead and take a look at the entire S&P 500 performance for this week, what stocks were up, what stocks were down. Overall, market was fairly green. Then we're going to go ahead and jump into the oil, dollar, silver, gold, bonds, and wrap it up with mortgage rates. So if you are interested in any of this information, definitely subscribe to the channel down below. Hit the bell to be notified every time we release a new video. And also give this video a thumbs up if you find it helpful, entertaining. I really like to do these recaps on a weekly basis to kind of keep track of what the market is doing, the current situation in the market. And we can see here we're almost back at new all-time highs in this current situation. So it's very interesting. Let me know in the comment section below, what do you feel about this market? Are you getting FOMO? Have you been investing quite a bit more, seeing that the market has put on, several digits now? I believe it's over 10% within just 2 or 3 weeks here. So the market has moved up a substantial amount. So let me know in the comment section below your thoughts. Also, if you're doing any sort of buying, and let's go ahead and get into the video. So last week's changes, May 25th through the 29th, 2020, the S&P 500 put on 3.01%, the Dow Jones put on 3.75%, the Nasdaq put on 1.77%, and the Russell 2000 put on 2.84%. So right off the bat, those were some huge changes. S&P up 3%, Dow almost 4%, and the Russell right there almost 3%. Then we had silver up 3.8%, gold slightly down 0.2%, and bonds up 0.31%. So overall the market was taken off. Silver was up by almost 4%, whereas gold and bonds are essentially flat there on the week. So how are the markets doing this week? Well, the S&P 500 here put on 4.91% this week, essentially 5% over a 5-day period. Look at this, just huge upwards movement here after Wednesday. The job reports came out on Thursday. Unemployment showed that it was slowing down by around 13%. I did put an article out this week as well. So I know over here, imagine if you had sold in May and just went away. We made some huge gains in May. The S&P 500 put on nearly 8% there in May. We had quite a bit of earnings kind of going on, some stock futures. I made some stock buys. I made a new video out on Monday going over what stocks I had been planning to buy and ended up buying. And here, the unemployment rate fell by 13.3%. So, the economy posted a surprising job gain. A lot of businesses are reopening back up here throughout the United States. We're going into phase 2 here in the city that I work at. I'm actually going back to work after working from home now these past 3 months. So I will be returning back to my job. I've been at my job, but I'll be returning back to my desk, working with all my fellow coworkers. So we did see a 13.3% reduction in the unemployment rate, as well as the economy gained an additional 2.5 million jobs. So that there on Thursday initially kind of spiked to the negative with the unexpected news, but then here you can see a huge market rally taking off on Friday as that information kind of settled in the back of the investors' minds. And there we are, up 4.91% there on the week for the S&P 500. Now the Dow Jones, this one here, took the cake this week, up a whopping 6.81%. There wasn't a day this week where this one was in the negative. And you can see here on Friday, it put on 3.15%. Wednesday, 2.05. Job numbers had no effect, essentially flat but positive there on the day here for the Dow Jones. The Nasdaq kind of came a little bit behind both the S&P 500 and the Dow Jones, putting up a 3.42%. Tech has already been fairly heavy towards the top. record movements. They've already been pretty strong year to date, already positive by 9.38%, whereas the Dow Jones is still negative by 5 year to date, and the S&P 500 is almost there, just down 1.14. Now, look at this beast over here, the Russell 2000. As these small mid-cap businesses are reopening, this one here is going to be the main beneficiary, up a whopping 8.11%. I don't think a lot of investors really discuss the Russell 2000 or really hold it, but you can be invested in this one with the ticker symbol RUT, and this will give you about 2,000 individual holdings of small and mid cap businesses. You can see there's 70 pages, and each one of these pages has, well, I believe maybe 15 or so on here. I'm not going to count them out here, but it looks like about 15 or so on the page, and then 77 pages. So this one, it is still down year to date by 9.67%, but this one just, 3 months ago was down by quite a bit. We were down at 1,000, almost 1,000 points there. Yeah, it was actually at 1,000. It's put on 500 points. If we look at the Dow Jones in the same time frame, Dow Jones completely different as far as the numbers here go. Let's see, where was I on the 3 month? Okay, so back 3 months ago, the Dow Jones was, I believe, was around 17,000, 18,000, and here we are nearly 10,000 points above where we were just 3 months ago within the Dow Jones. So just amazing growth. Now, Monday, it may potentially open up negative, but we shall see how it kind of plays out. I believe there's a lot of fear of missing out, FOMO, going on right now, where a lot of investors are looking at having potentially missed some of the gains that are happening right now. And I'm not saying that the market will stop going up. There's no way to tell with the Fed injecting cash and BlackRock doing all those stock buys out there. But the future is the future for a reason. It's just unknown. So let's go ahead and take a look at the 1 week performance. Here we go over at finviz.com. Really great website to kind of see the performance here of the sectors here up at the top: technology, communications, consumer defense, consumer cyclical, financial, healthcare, industrials, real estate, utilities, and energy and basic materials. So right off the bat, by looking at this heat map, you can see that this week healthcare took a bit of a break. You can see Pfizer down roughly 5.76%, Johnson & Johnson also down 0.97%, Eli Lilly down 2.44%. So why are these healthcare companies in the negative this week? That's because in the last few months, let's take a look at the 3 month performance, these healthcare companies have actually moved positive. Now, I wish I could actually remove what has happened recently, but they have had quite a bit of growth already. They weren't really affected by the market. The whole event that took place these past 3 months, you didn't see Johnson & Johnson fall 20-30% with the rest of the market. You didn't see that with Pfizer. You didn't see that with AbbVie. Gilead Science out there did not. They were shooting up like a rocket during this time frame. They're just taking a bit of a break now during this little market recovery because they didn't fall with the rest of the market. Now you see the financials putting on a lot of the gains over here. JP Morgan up 14.3%, followed right behind by, oh, actually they're following Bank of America, Wells Fargo, and Citibank. You can see some huge gains there with the other financials. So if you took advantage of buying financials on that dip, pat yourself on the back. I think you did a really good did some really good investments here during that time. Some other areas that I know in my portfolio were shooting up were real estate investment trusts, such as Tanger Factory Outlet, ticker symbol SKT, or Simon Property Group, ticker symbol SPG. Both of those were retail REITs, which were up crazy this week in my portfolio, up, I believe, nearly, I don't actually know how much they were up this week. I know they were up either 15% on Friday, or maybe that was the weekly performance when I was taking a look at the portfolio. But I know that they put on some massive gains this week. So Apple, Microsoft, just everything across the market, very strong. Industrials, aerospace, insurance, and such. So lots of green out there. The ones that weren't affected too much during the pandemic, those don't have a whole lot of performance here in the 1 week. So that's enough there. The blinding white, right? So oil here, USO, is up a whopping 11.79%. This is one I'm not sure, what to kind of think of this one. They did a reversal. They were a couple of dollars at a time. They did a 8 for 1. So for every 8 you had, they took one, and that really helped this one come out. And when they did the reversal maybe a month ago, I think they had been around $17. And you can see they put on quite a bit here within the last month. They're up 38.75%. So very interesting. I know a couple YouTubers out there who are buying that one. The dollar is moving to the downside here as more cash is getting injected into the market as the Fed is doing more printing. We can see that the valuation of the dollar is losing value. At highs here, it was 98.22. It is now 96.95. So losing a little bit there of the dollar value. Silver and gold both negative this week. Silver has been chugging higher, chugging higher. We talked about last week how it was hitting this resistance. This is some high resistance between $16 and $17. I said at the time it would be worth it to shave off some earnings, take a little bit of profits there, because you're hitting this wall here, this resistance point, where really silver hasn't ever really broken above the $16, $17 point. You can see that this is just where it hits, and then it may break to about $18, but you'll see a quick fall to the downside here. So silver down for the 5-day change, negative 2.58%. Gold also down this week, 2.99%. So essentially both of these nearly lost around 3%. We can see silver is still down year to date, negative 2.7, and gold is positive 10.59%. So interesting. Their bonds are also negative. They went ex-dividend on the 1st of June. They're going to be paying out their shareholders on the 2nd. I think that's really interesting how they go ex-dividend and then immediately the next day they pay out that dividend. That just kind of works probably like an interest account. And taking a look here at the bond fund, this one is down roughly 0.7%, but it has had some positive this year to date, so up 4.11% year to date. I know a couple other investors out there who are holding about 10% bonds as they had moved cash from bonds to equities during the downfall, and they're investing in equities at the current time just because they're able to buy some valuations in their portfolio that are a little bit lower than they had been. So that's kind of nice there for the bonds. Now, as far as the 10-year goes, you can see that the 10-year yield is actually shooting up by quite a bit. If we go back over here to the Facebook page and we look at the 10-year note, it was at 0.65% 1 week ago. Now check this out. 10-year is at 0.9. I think there's a lot of confidence being shown here. As the 10-year moves over the 1%, we may see the market kind of see some positive movement off of that, seeing that 10-year note kind of shoot above that 1%. So very interesting. Mortgage rates were at 3.56% for the past either 2 or 3 weeks. This week they fell down slightly, so the 30-year mortgage rate was decreased by 9 basis points to around 3.47%. I know on my refinance, I'm still going through the process. I had to submit a couple new items for my refinance, but I should be signing here shortly. And then I have a current rate of 3.25%, but I will be refinancing. Oh, no, I think it's 3.75, and I will be refinancing to 2.75%. I paid roughly $400 for the refinance, but I'm keeping my same years. I believe I have 24 years left on my note. I'm not getting sort of charged any other fees. I'm just basically decreasing my mortgage by about $40 to $50 in exchange for paying $400. So in about a 10-month span, I'll make back that cost and then have a lower rate, which will decrease my overall expense for the next 22 years by quite a bit there. So that is essentially all we're going to be covering in today's video. I will be posting a weekly post, weekly changes for this week over on the Facebook page. So if you are not following me already over on Facebook, definitely go down below. Follow me at the Financial Investor 101. If you guys did enjoy this video, definitely give this video a thumbs up. If you have any comments or suggestions, or would like to leave a comment as to what you are thinking about this market, are you seeing lots of investors having FOMO? You know, what are your thoughts here on the market? I posted the screenshot over on my Instagram, and it looks like I shared it over here as well. But this was a screenshot here of lows in March of 2020. The portfolio, this is a Roth IRA, meaning that you can only put in so much money per year. It had hit lows there of $14,783.23. Those were the lows back in March. Here we are just 3 months later. I haven't put in $6,000 into this account, but you can see here that we are nearing nearly $25,000 of equity. That is nearly a $10,000 difference, and we've only really added around maybe $2,000-$3,000 to this account. That means the other $6,000 is all from market recovery, market appreciation, and dividends getting paid out into the account, which are buying back more shares, and those shares are showing appreciation and paying out dividends. So it's a very nice thing to kind of see how this market has just had some major swings here in 2020. So if you're out there and you're thinking about getting invested, whether it's high or low, just begin dollar cost average, have a plan of how much you want to invest on a yearly basis. In my case, I do my 5% for my Roth 401k at work, and we max out mine and my wife and I's Roth IRA. Outside of that, we don't invest too much more in the stock market. But yeah, I just noticed I had the icons there on the screen, so I'm sorry about that, but that is going to be it for today's video. Subscribe to the channel if you have not yet subscribed. Leave me a comment down below and give this video a thumbs up, and I will see you next time. Have a great day. Bye.